Hi, this is Ranjan Goenka. In this video, I will be talking to you on the two terms which are extensively used in the TDS ecosystem. One is the delayed deposit and the other term is delayed deduction. Sometimes both these terms are quite confusing, so I would just like to explain both these terms independently and you will be able to know what the difference is. Whatever TDS you deduct every month needs to be paid by the 7th of the next month. Only in the month of March, this date is relaxed up to 30th of April. So whatever, in fact, like if you are paying beyond the specified date, we call it the delayed deposit. And delayed deposit has its own penalties in terms of interest, which currently is 1.5% per month or part thereof. This is quite simple to understand, and most of the default which ever happens is basically on the delayed deposit. The other term is rarely there are situations of a default, but when it happens, one gets confused. So would like to stress more on that, what exactly it is and what are the rules behind it. The rule of deducting TDS is very clear. The liability of TDS comes in on the date on which the payment is made or on which date the credit is given to either the employee or the vendor. So the date of credit or making payment, whichever is earlier, is supposed to be the date on which the deduction has to take place. 99.9% case, both these dates remain the same, so you never get a default. But in case for any reason the deduction doesn't take place on that particular date, and the deduction takes place after that date, it amounts to a delayed deduction. And there is a penalty in terms of interest for delayed deduction. As an example, suppose you are supposed to deduct tax which you are not aware, and you have made the payment to the vendor. Maybe after 1 month you realized that your tax was to be deducted, so the delayed deduction that you do after 1 month actually attracts penalty because of a delayed deduction. So delayed deduction means in case you are deducting the tax the date after the day you are supposed to deduct, and the date of deduction is either the day you give the credit or the day you make the payment, whichever is earlier. Now I would like to further stress there is something called delay because of threshold. Let me explain you what threshold means. For certain sections in income tax, in TDS, like maybe in case of a professional, up to 30,000 if you pay, you don't have to deduct TDS. So one is not deducting TDS up to a time, but during the financial year, once the 30,000 amount crosses, then probably you will have to deduct TDS for the entire year. So basically when we talk about threshold, the date of the deduction liability happens the day your threshold limit crosses. So there is a method to handle threshold. So in this case, if you have not deducted when the threshold was not reached, it doesn't amount to a penalty because of a delayed deduction. So delayed deduction and delay in what you call deposit are two separate things, and this needs to be understood explicitly. I hope you found this video useful. Thank you for your time.